Order. Ms. Thompson, if you would, please call our roll.
Preble Acton, Rhonda Allen, Dr. Andrea Anthony, Doug Bodery, Amber Brown,
Here.
Shay Crowell, Holly Deering, Alan Farley, Mary Hickerson, Lois Miller, Alan McAdoo, Jeff Phillips, Shantae Sherrill, Eric Tutobeni. We have a quorum.
Thank you, Ms. Thompson. We have a quorum, and now we can conduct our business. Well, welcome back. I think this is the first meeting. Eric came up to tell me it's good to see me. He hadn't seen me in a year, so we've been Zooming for the last year, so this is our first full meeting, so we're glad that everybody can make it today. A couple of people haven't been able to make it. Mr. Elam won't be with us. Our risk management director, his daughter had a little surgery down in the Georgia, Atlanta area, and he and Sandra went down and with her, and he'll be back soon. And I believe our representative from Mercer is stuck behind an accident on the interstate and can't get here. Eric?
I saw that on the way in, and I was actually curious. They shut down that 840 in both directions.
Oh, I just heard that he wasn't going to make it because of that. I don't know what happened.
Shut down in both directions.
Well, when they do that, it's a bad accident, and it went on both sides of the interstate, I'd say that. And it could be usually a fatality when there's, it's that bad. They shut down to investigate. Yes, sir. I haven't heard. Hopefully nobody lost their life. But welcome back anyway. The chair will entertain a motion to approve the minutes from the last meeting. Is there a motion?
Motion to approve.
Have a motion to approve. Is there a second? Second. Have a second. All in favor of those signify by saying aye. Aye. All opposed? Motion carries. See how much faster it goes when you don't have to call her off? She's all for it. Ms. Thompson's all for that. Okay. Next, Ms. Griffey. Melissa Griffey is going to give us our financials on behalf of Mr. Elam. So, Melissa, if you would, please, you're recognized on the financials.
Okay, so we'll start with the 264 fund report, and if you will look in the calendar year for the month of April 2021, the revenue is at $7,763,000. I'm sorry, and 34. I don't see too well with these small numbers. I apologize.
You want my glasses?
I may need them. I have contacts in medicine.
Got to get them back. All right.
Which way is up?
Just stick them on your nose.
Okay, that's better. Okay, expenses are for April 2021 are $6,642,886, and the revenue less expenses is $1 million. I can't see even worse with those.
Okay. Well, you're at that in-between stage. You're not
yes,
old yet.
Sorry. $1,120,148. If you look at the totals year to date, the revenue is at $32,316,879 versus the expenses is at $27,218,532 with a plus balance of $5,098,347. If you look down to the enrollment numbers for April 2021, we were averaging 6,319 enrollments in the medical plan. If you look down to the far right-hand corner in the fiscal year for 2020-2021, the revenue was at $67,648,465 versus the expenses was $71,865 with a deficit balance of $3,352,400. We'll move next to the Fund 264 report for the current fiscal year for April. For workers' comp, we were at $56,490.20. For OJI, at $69,530.13, with a total of $126,020.33. Year-to-date for workers' comp is $126,605.36. For OJI, it's $449,728.74, with a total balance year-to-date of $576,334.10. And that concludes the financial reports.
Okay. Are there any questions on the financial report? Seeing none, is there a motion to accept the report? Have a motion to accept the report and a second. Any further discussion? All those in favor of accepting financial report signify by saying aye. All opposed, motion carries. Next we have workers' comp, OJI. Melissa, you want to do that as well?
Yes, sir. Dan Good also is out of the office today, so I will be presenting the OSHA report. So I bring your attention to the accident frequency for April 2021. We had a total number of accidents of 16 for the month of April, bringing the year-to-date total to 65. If you look to the far right, the OSHA log summary, of those 65 total, 47 of those injuries were OSHA recordable. 21 of those injuries were restricted day claims, 11 of those were lost day claims, and 15 of those were other recordables. If you flip over to the next page, you will see on the graph for the month of April that we are actually up just a little bit from 2020. We're sitting at 65 compared to last year was 52. Just make mention again that school was closed for a large part of the year, so the numbers did increase a little bit, but that's because we're all back now. If you flip over to the next page, the on-the-job injury incurred, we are sitting at $261,000 for April of 2021. If you flip over to the back page, the breakdown of the injuries, you will see that of those 16 injuries for the month of April, 8 of those were at the Board of Education, and 8 of them were at the County General employees. If you look at the breakdown at the bottom, 5 of the County General was at the Sheriff Department, 2 was at the EMS office, and 1 was at the County Clerk's office. And that concludes the OSHA report.
That concludes her report. Are there any questions on the work comp or OJI? Is there a motion to accept the report?
So moved.
Have a motion from Ms. Hickerson. Is there a second? Got a second from Lois and Alan. Any further questions? All those in favor of accepting the motion signify by saying aye. Aye. All opposed, motion carries. Next we have our wellness update and Cologuard campaign update. Mr. Chapa, how you doing? Welcome back.
Thank you.
Your head's not fuzzy anymore. Huh? You know, when you were Skyping in, you'd move and there'd be a shadow back there.
Oh yeah, definitely. Yeah, it's good to be back.
Yes, sir.
Hello, everyone. So the incentive totals for May are as follows. The annual physicals, we're currently sitting at 1,282 versus 888. Biometric screenings are currently at 1,632 versus 1,391. Health assessments are at 491 versus 343. Mammograms currently sitting at 651 versus 571. OBGYN screens are at 947 versus 879. Colon cancer screens are at 220 versus 263 last year, but we're currently running the Cologuard campaign, which I'll discuss in a minute. Cervical cancer screenings are at 974 versus 784. Prostate exam screens are at 340 versus 253. Flu shots are at 2,026 versus 1,873. And for our current goals for the 2021 that we added, work with a health coach to achieve a health goal. We've had 8 individuals meet that goal. Work with a health coach to overcome a chronic health problem. We've had 6. And then we've had 3 individuals complete 16 weeks of the Omada Diabetes Prevention Program. Currently, to date, goal met all 3 points for their incentive campaign. We have 2,124 versus 1,488 last year. Now, considering COVID did start to pick up last year around this time, we did postpone the incentive campaign. We are still seeing some pretty good progress in numbers given this time this year, especially in the realm of annual physicals and biometrics. So we're seeing some really good progress with that. That being said, we've got mobile mammography scheduled quarterly for this year. The next one we have will be on July 23rd, and I believe we're going to have that out at the county clerk's office in Smyrna. Cologuard campaign, so we kicked that off May 17th. That'll run for 3 months until July 30th. It's eligible for all individuals, county employees that are 45 and up. We've seen a really good first response to that. We hope to be able to report back some better numbers as we get in later into the campaign. But in just the first 7 days so far, we've seen a huge level of engagement so far. So we'll report back on that next month. And that will conclude my report.
Any questions for Mr. Chapa? Lois?
Okay. So I noticed on the Omada campaign, we only had 3 people so far complete the 16 weeks.
Correct.
We know that diabetes is a huge driver in our cost. How many people do we have enrolled in that campaign and that might be coming up on completing this goal?
I currently don't have that information in front of me, but I can get that to you for the next meeting.
Okay, thank you.
Thank you.
Other questions? Okay. Thank you, Mr. Chapa. Next members, we have Ms. O'Neill, Amber O'Neill. She'll give us our second quarter wellness challenge update and our midpoint. Glad to have you back. Okay, you recognize?
Good afternoon. So we ran a Spring Steps Challenge. It was more successful, I think, than we even thought it might be, we felt. It was amazing. So we had 301 people sign up to participate in the challenge. Of that, 267 people actually completed the challenge for an 89% held rate of participation. So that was just amazing. We had 80 teams, and 25 people showed up to this challenge celebration, and 60 people responded to the survey we sent out asking about their experience. The total steps taken for everyone was 62,795,247, which is 32,402 miles. With that, it takes 3,000 miles to get from coast to coast. With everyone's steps, they could have crossed from coast to coast 10 times. That's pretty impressive. When we sent out our surveys, we asked specific questions about how it improved health. So with that, we asked the participants if the challenge got them moving more in their typical day than what they were previously. 98.2% said yes, that improved that. So 49%, just over 49% felt more energized. Just over 43% said they slept better. 66.7% said they felt healthier. 47.4% said it was a stress reliever. And 38.6% said that it put them in a better mood. Some specific comment and feedback were, it was a great motivator. I hope the event is offered again, maybe longer than 3 weeks next time. I enjoyed the fact that it was a group effort. We were able to push each other to get the steps in. The challenge got me moving more. I loved this. I was in need of something to get me motivated. Having a team rely on me also helped a lot. I would totally do this again. Thank you for inviting us to be part of it. I really liked this challenge. It definitely made me more aware of how much I move or don't move during the day. I thought it was all put together well, and our team really enjoyed the friendly challenge. This was great for me. I truly appreciate you putting this competition together. It was a fun team competition. So all in all, the feedback was overwhelmingly positive. Getting people moving was great for their health, and it sounds like people are interested in continuing that movement. So we always want to see people active, and we're going to look at other options to keep that going and keep that momentum going for the county members. So on to our monthly analysis for the health centers. For your visit analysis, the health centers saw 708 visits in April. Of that, 539 were unique members seen. And for the visit summary by member type, we had 109 children, 509 employees, and 90 spouse participants, for that total of 708, and we saw 304 of those visits at New Salem, or of those members at New Salem, I'm sorry, 212 at Stewart's Creek, 192 at Walter Hill, for the total of 708. In the month of April, we had 118 members that had more than one visit. We had one member that had 9 visits. We had 4 members that had 5 visits, 8 members that had 4 visits, and 105 members who had 2 to 3 visits. Of that, the reason that we had those that had the multiple visits, most of them were due to some serious health conditions that they were dealing with, for those that had really that 9 visit or the 5 visits. For those that had the 4 visits, and really probably likely those that had the 2 to 3 visits, though I didn't delve so deeply into the 105 people that were in there, but I did look into the other ones. A lot of them were situations where they came in for their annual visit and then got sick, or came in for their annual visit, we found something, they had to come in and follow up so we could address that condition, or they also saw the dietitian, and so it's really kind of just those combined services that are connected to their wellness, really, that kind of create a lot of those multiple care situations. With the visit types, we had 313 established patient visits, which of course could be anything from a medication refill to a sick visit to just needing to have a follow-up on your care, those kind of things. I was excited to see that 108 of our visits for the month of April were those annual wellness visits. So with it being still just April in the year and seeing that number be so high, it's exciting to me to see that. We had 137 telehealth virtual visits, which means they included both the visual aspect of video as well as the audio, not just a telephone visit. And of our telehealth visits, we only had to convert 23 of those to telephone visit only because they were unable for some reason to be able to connect virtually. It is always our first hope that we will spend that virtual visit in that full video connection, so it's our first option. We only convert to telephone when that seems like it's an unreasonable choice for the member. We also had 31 dietitian visits in the month of April, 36 new patient visits, and 60 nurse visits. Those nurse visits are going to consist of things such as lab draws, vaccinations, injections, things like that, where the line of care has already been lined out for them and they just need to show up for something small that needs to be done by a nurse visit. April had 26 available scheduling days versus March that had 27 scheduling days, so that could account for part of the reason that the numbers are slightly lower than they were in March. That and our previous dietitian has left our services and moved to sunny Puerto Rico, but we have brought on her replacement, and so we just had a transition period in there from March into April while Elena, who was our previous dietitian, saw patients virtually, but from not being on site, kind of reduced some of her access for people here until Jennifer, now who has come on, can now start seeing them virtually, and she is active now in the practices to do that. Additionally, there were 5 Thursdays and Fridays for the month of April, and Thursdays and Fridays were the busiest day for the month of April. We had 160 virtual appointments in the month of April. Walter Hill continues to remain the clinic with the highest average of virtual utilization. But again, that has always made sense to us with Walter Hill only having the single exam room. Of the virtual visits by health center, New Salem saw 15.46% of their visits virtually, Stewart's Creek saw 21.23% of their visits virtually, and Walter Hill saw 35.42% of their visits virtually in the month of April. As usual, I looked into the choice versus need, meaning that it was a member choice that it was more convenient for them to be seen virtually versus they had symptoms that would preclude them from coming into the clinic that were indicative of possible COVID-type infection. So in the month of April, 69.38% of the visits we saw virtually were seen due to member choice and convenience for them, and 30.63% were seen due to need because of their symptoms. So it continues to look as if the trend is the majority of the visits we do virtually are because members are choosing to use that as an access method. If you look, we have a breakout over the total months year-to-date for our virtual appointments, and you'll see that we tend to hover right somewhere in the 75 percentile of live in-office visits versus approximately 25% are virtual. You know, it's varied slightly month per month, but that tends to be the approximate trend that we do. Okay. Our top 10 referrals by specialty, you'll see that our top referral starts to be dietitian again this month, and again, that's just kind of that carryover for that one transition month we had because last month was the first month that the dietitian wasn't the top referral. It jumped up a little bit this month because we had held some of those to wait for that transition to happen so we could start people with a good quality of care with a new provider. Gastroenterology was second with 9 referrals, orthopedics with 8, dermatology with 7, and neurology with 4. We had a total of 70 referrals for the month of April. 31 of those came from New Salem, 16 from Stewart's Creek, and 23 from Walter Hill. In our financials, you will see that in April, we had 539 total unique members, a total operating cost of $205,749.78 for a PEPM of $32. And in our population health analytics, you'll see that our top diagnosis code again this month, which is super exciting to me, was 22.63% was for the general medical exam, which is that annual physical. And we'd love to see that wellness care being that top number. And not just a little bit, it was vastly higher than all of the other diagnosis codes on the list. Second came type 2 diabetes at 8.15%, then essential hypertension at 7.91%, and then a host of others at a smaller around 4% for things such as screening for nutritional disorder for the dietitian, hyperlipidemia, anxiety, and more screening for different disorders. In our visit demographic summary, you'll see that those in April, that 72% of the members seen in April were female, and of that in the age range of 40 to 49 for the female population and the age range of 50 to 59 for the male population were the highest populations seen. We did see, quite a number of those women in that female population, that 40 to 49. So that was definitely our biggest demographic. But that being said, we saw a lot of children right now, and we tend to see a bit of a trend for children coming in right now. We're seeing a lot of sports physicals and things like that with summer coming around and summer sports. So this month we actually had 46 females in the age range of 10 to 19 and 24 in the age of 10 to 19 for males for a total of 70. And I think that's one of our highest numbers for children being seen in practice. In our BMI summary, in April, female members, the highest percent of BMI was in the obese category of 40 plus. In April, the male members, the highest percent of BMI is in that overweight category of 25 to 29.9%. So again, super excited that we have that new dietitian on and ready to work on some of those issues for the county members. And last but not least, I was just going to talk a little bit about the Cologuard campaign that Chuck had mentioned. So we did just start, obviously, on the 17th, so we only have 7 days into the campaign so far. But even with only 7 days into the campaign, we've already ordered 49 Cologuards. And of that, 9 have already completed the screening, and we've gotten results back. So that's a 5% completion rate in just 7 days. Just to talk a little bit about the process so everyone understands how that's going to work when they call into the clinic. So the member will call the clinic of choice, whether it be New Salem, Walter Hill, or Stewart's Creek, and ask to be scheduled for a Cologuard. They will be scheduled with their provider of choice. That provider will then meet with that member and talk to them about their health history and their risk factors. Because as much as we would like to give everyone a Cologuard, it does not make sense in all situations. And so we need to make sure that that's the best course of action for the health of the member to send them forward. And then the provider will make a plan with a member for the best process for the colon cancer screening, whether that be Cologuard or a colonoscopy or some other type of screening process. And that will be made between the two of them in their best decision. Whenever possible, we'll recommend the Cologuard, but as I said, sometimes it's simply not the appropriate choice to move forward with. Though the majority seem to be so far at least able to receive the Cologuard, so it's a great start. The member will then receive the Cologuard in the mail, and that kit will contain instructions on how to use it, as well as a return envelope with shipping attached to it, so they can just send it back in. They don't have to leave it from home. And it's my understanding that they generally receive that within 24 to 48 hours of it being ordered. So it's pretty quick. So they see us, they get it, they send it back in. And then the provider that the patient saw will receive those results from the Cologuard program, and they will then send the information about those results directly to the member through their patient portal. And if there is additional follow-up needed from those results, they'll communicate that as well, and we'll be reaching out to get them scheduled for any type of follow-up care. On a more personal note, I lost my husband when he was only 44 years old to colon cancer. So I recommend that if you can take advantage of these screening practices as soon as you possibly can, please do so that you don't leave your family in the state that mine has been left in. Thank you. Are there any?
Thank you, Ms. O'Neill. Any questions from her report? Lois?
On the in-person versus virtual appointments, I think the roughly 25% is higher than we've ever seen before. What I'm wondering is, I know that the patient is still using the doctor's time and their expertise, but does this, by the fact that they're not coming in and taking up clinic space, is this a possible path for additional savings for the county?
I think that's a really good question. We do still utilize the same amount of staff, so I think what we're more looking at with that is the space constraint that we're relieving there. So, we'll still have a front desk person who will reach out and get them checked in and go through their demographics to make sure that we have all of the right information on file with that. Then they'll go to the medical assistant, who will get some of that health history stuff that you would do with your medical assistant when you walk in the door to get your height, weight, all of those kind of things. If they have a scale at home, we'll ask them to weigh themselves, things like that, so we can make it as accurate as possible. So we're not really reducing any staff or cost time there. And then they'll again transfer to the provider, who will spend the same amount of time with them on that virtual visit as they would have if they'd have been live face-to-face. It is our goal to make that virtual visit as close to that in-house visit as we can, to make it as positive and as useful to that member as it can be. So I don't know that there's tremendous cost savings in those types of benefits. However, when you are talking about the fact that, as clinic usage increases and we have additional people coming in, there's always possible plans in the future of, could we do that instead of adding space? Could we, instead of having to have an additional exam room, could we utilize that, that virtual option to save some overhead costs there?
Other questions for Ms. O'Neill? Mary?
Looking at the per employee per month report, I noticed in March we had 576 for a total of a little over 132,000, but we had less for April at 539, but for 205 plus thousand. Can you kind of elaborate as to how we have less but costs more? Please,
absolutely.
ma'am.
Yes, I kind of expected that question. So the lab billing that we do for all the lab services that we do, so far they've been paid at the quarters. So we paid the first one, I believe in December. We paid the second quarter in that April bank. So that cost alone added an additional $58,225.15 to that bill in April that had not been any part of the cost in the previous months. If you were to average it out, it'd be about $19,400, give or take a few dollars per month added out to there. That being said, going forward, just to keep it a little more uniform, we are going to be doing those bills monthly, those invoices monthly now for the labs, just so that it doesn't have that big, huge chunk at the quarters. And then additionally, with summer coming and with people starting to get to travel, with children having sports physicals, all of those things, we have seen our vaccination usage go quite high compared to previous months, and so we've been adding a lot of vaccine stock to what we have. So just to give you an idea of what that was, we had an additional vaccine cost alone in April of $7,390. That was just in pure vaccine cost. That didn't include the needles, that didn't include anything else. Tdap is and this is all, these come in 10-dose packs, so this is the cost per 10 doses. So Tdap, which we ordered for every single site in the month of April, is $431.47 per 10 dose. Then an MMR, for a 10-dose pack, $824.99. Meningitis for a 10-dose pack, and since we don't have as high of a usage of meningitis, we bought one 10-pack to share between the sites, is $2,034.10. And then the shingles zoster vaccine, $1,618.50 per 10 doses, and that is a 2-dose series. So some of those costs too, as we continue to restock those vaccines, and there will be some additional vaccine costs going forward for sure, because we also have the rabies pause program we'll be doing here, I believe next week. And then we also have the hepatitis. It's that time of year where we're doing the hepatitis vaccinations for those that are in the OC Health type scenario where they need those hepatitis vaccines. So vaccines can really drive that cost up quickly.
Mr. Farley.
On the virtual, you got to break down by location. Does there seem to be a specific age group that seems to be utilizing that more than other?
I thought that in the beginning. I thought, we're going to see a bunch of 30 to 40-year-olds, really taking care of that virtual. I was amazed to see how many 60, 70, 75-year-olds we're seeing in there. So I think that it's actually more uniform than we expect it to be. I mean, yes, there's a larger demographic for sure in some of the younger population, but it does seem to be spanning all of those age groups now.
Because that's what I thought so too, so that's good to hear. That's very good to hear.
Other questions for Ms. O'Neill? I've got one, Amber.
Yes, sir.
St. Thomas still happy with the partnership?
Absolutely, sir.
All right. Just checking.
We very much enjoy our partnership with Rutherford County.
All right. Thank you. All right. Appreciate your report.
Thank you, sir.
Next, we have our dental and vision for retirees. Jake, looks like that you came through the wreck unscathed. Thank goodness. And I have no idea. We're just glad you made it through, and we hope that
veterans.
Yeah, that's usually not good. But we're glad you made it. Okay.
This before the property and casualty. You want to do property and casualty first? I'll hang on.
I was trying to. You're short.
You're speeding along.
No, you're short. Sure? Yeah. Let's do dental and vision first, and then we'll bring David up. As what I wanted to do. Spend a little more time on David. Sorry, David.
Perfect.
Hang on just a second. So, glad you made it, Jake.
Yeah.
So what Jake is going to be presenting is some analytical data on something that we've been asked to look into. So several times it's been brought up by our retirees that we don't offer dental and vision to a retiree. They do have the option, if they're enrolled at the time they retire, to enroll in a COBRA plan for 18 months. And then after that, they have to go out and find one themselves. So it was brought up in the commission meeting, I believe, for asking that we look into this. So that's what Jake is going to be presenting, and then afterwards we'll kind of field questions and talk a little bit about how we're going to make this work. But that's what we're presenting is to offer dental and vision benefits to retirees. So.
You wanted to repeat that, Commissioner? Okay. He couldn't hear you.
What Jake is going to be presenting is financial analysis of what it would look like for us to pick up retirees on our dental and vision plans that are being offered. So currently they have the option when they retire to enrolling COBRA benefits if they're enrolled in dental and vision at the time they retire. That's only for 18 months. So what we're proposing, or what we've been asked to look at, is to offer dental and vision to retirees that qualify when they retire along with the medical benefit. So Jake is going to present an analysis of what that would look like.
And the analysis is rather short because, so let's take a step back. This is dental and vision for just retirees, pre and post, okay? This was the commission meeting maybe last Tuesday or 2 Tuesdays ago. They asked about looking into it. As something that's been brought up for several years now. So what we want to do is just present you guys the statistics and then kind of see what your thoughts are on moving it forward. So from a dental perspective, total cost of the dental in 2022 is expected to be around $2.5 million. And that is around 4,400 enrollees, okay, employees enrolled in the dental plan. Vision total cost for 2022 is going to be around 630, or projected to be around 630,000, with 4,600 enrollees. The biggest takeaway here is to remember that both of these products are voluntary, meaning the employees pay the full cost of these products. So what we wanted to know is just, is there going to be any adverse impact to the plan overall? Being that both products, or really mainly the dental, have caps, that's kind of how the dental plan works, right? There's annual maximum, so the risk to the plan is so much lower than it is on like a medical claim. Vision operates in a similar fashion, so the risk to the plan is relatively low. From a retiree population, we're looking at around 639, 640 eligible retirees. We do not believe all retirees will take this, right? So even if a majority of retirees took it, we're talking, less than 10%, way less than 10% shift in enrollment. So working with Cigna, working with their financial team, due to the low risk of the plan, it's voluntary, so the employers are paying for it, and the relatively small risk to enrollment, the analysis was done, and we believe that we can allow all retirees to be eligible for the dental PPO, dental HMO, and vision plans, and there's no needed change to the ASO fees, no needed change to the rates, and no needed change to the underlying funding rates that we set. So the budget that we have set for 2022 for dental and vision, the rates that we have set for those will cover what we think is going to be a minimal impact. So we believe from a financial standpoint that it's very low risk. It could be very high reward if it's something people want, but we need kind of your buy-in. I'll let Melissa talk about, that's the easy part, allowing them to enroll, allowing retirees to enroll, kind of, do they get to enroll anytime they want? Is it just when they're first retired? Kind of setting the parameters is the next step. But again, from a risk analysis, very low, and something that we would be supportive of. So questions, and I'll stand here and help Melissa answer any questions y'all might have.
Okay, questions, Mary? You already got the mic. Lois?
I actually have a few questions. So, and one of them is in the structure of how can they come and go. You wouldn't want it so that they could go in one year and out the next and then back in. And retirees, even though the plan is self-supporting and paid for by the employees, and in this case then by the retirees, the retirees are going to usually cost more than active employees just by virtue of age and deterioration of teeth and that sort of thing. Is there going to be a risk load to the rates for adverse selection at all on that?
For that answer, no. Cigna is not going to, they are not going to load any rates for the DHMO. They do not recommend any change in the funding. Our Mercer analysis looked at it, and we don't either.
And so you don't think then that the additional costs rolling over to the employees for the next year's rating would be an issue?
We don't right now, no. We don't think there will be very many retirees accept this, because to your first question, Melissa, do you want to talk about how they might be eligible? Because to your point, this isn't a get in, get out when you want to. This is a...
Yes. Well, first of all, they have to qualify. Just like we'll follow the guidelines for the medical. So if they qualify for the medical and they have dental and vision at the time they retire, they would be eligible to keep it if they wish. So we would not start offering it till January 1st of 2022. We would open it up during the annual enrollment period for the retirees, which for the retiree group is going to be November 8th through November 19th. If they wish to sign up initially, we'll have an open period for them during annual enrollment to sign up for the whole group of retirees that we currently have. For those ongoing, as they retire throughout the year, they would get the option when they retire to keep the benefit if they wish. They would not be able to just pick it up and drop it any time during the year. We would follow the same guidelines that we follow with the health plans. It would be done during an annual enrollment period, or if they had a qualifying life event or something like that. Administratively, we would have to keep it close to be able to administer the plan. But
Okay, and so then for those who aren't in it now but they qualify based on their service and their enrollment in the medical and stuff, would there be any second-year requirement for Class 3 or 4 services? In other words, in a lot of the commercial plans that are available that retirees are coming into new, they get basic 1 and 2 class services for the first year and can't do 3 or 4 until they've put their money in the bank, so to speak.
So the plan does have a year waiting on major restorative. So the plan design, and Paul Huffman from Cigna is also here with us. So the proposal was to keep the structure exactly the same. So we would impose the same restrictions on the retiree group.
Good question, because we're trying to be we don't want to open it up for everybody all the time, but we want to allow maybe this first year for people to be able to get something they haven't had in the past.
Sonia?
So I did hear you, is this on? I did hear you correctly. Anybody who's already a retiree during the open enrollment process would be allowed if they meet the criteria, if they had dental and vision when they were actively employed.
Well, we would have to open it up during the annual enrollment period. It would be the same for any active employee. They could pick it up during an annual enrollment period at any time. So, Paul, am I assuming that was okay with underwriting and everything was passed for us to open it up during the annual enrollment period, since it's an open period, to sign up for the first time, because they weren't offered it at retirement?
Okay.
So we would offer it to all the existing retirees. Going forward, we would offer it to them at retirement after January 1st.
And going forward, if somebody met the criteria to retire and keep health insurance or medical insurance, they would have had to have had dental and vision already moving forward.
Yes.
But from this point backwards, you're going to offer it because it wasn't available at that time.
Correct.
Okay.
Yes.
Yeah, this will be the 1 year to kind of catch people up, if you will. Years 2 and 3 will follow the same guidelines. If you had it when you retired, then you would have the option. If not, you would not.
Other questions? Dental and vision. Sure, Jeff.
This goes on forever, right? If you enroll in it and you're 95 years old, you still have the plan. What if at some point in time it has an adverse effect on our regular plan? What do we do then?
We would look at the rates every year, right? But to your point about, yes, it does go on forever, just like it does now for people in medical. But again, the rates are relatively low. Think about the dental is the maximum, how much in a year?
It's $1,500
is the most you can spend. So the adverse impact is, the risk is relatively low. The funding rates that we have set would promote that being solvent for a very long time. And you can drop it, right, if you want to into the future. So, from your point about it goes on forever, if you get to...
But we could.
The county commission can choose to drop it at some point in time in the future and say we're not covering, No, but that is a possibility, right?
It's a possibility, and this is something that, to your point, is we're doing some dental eligibility around the up to age 26. We're trying to make some things more streamlined. The fact that they're offered medical and not dental and vision, it's something that's been talked about in the past about, again, combining those. So it does make some sense. But to your point, if years down the road this is not seen as a benefit, or if nobody takes it this year, we don't know, then we have the option to not offer it.
It's kind of like allowing commissioners onto the plan. We've been down that road.
I've heard it brought up several times, and like I said, it was brought up this past meeting, so we figured we'd at least look at the data and just see, because I think in the past it was always, the question was never really answered, so.
Sonia.
Or you could just set a retiree post-65's own rate, and it would not then impact our utilization because they would have their own rate to offset the claims, right?
We could have. At this point, again, we think the rate that's being charged, everybody would be okay to fund those as well. But yes, absolutely.
Lisa?
Well, I was just going to go back to, we tried that, and we did that for several years, but then on the medical, the group agreed to blend the rate for the pre-65s. So pre-65s. So it's like, would you have that blended and this not? Or would you just keep it?
Lois?
Yeah, like I said, if they have an annual max of $1,500, the problem is you're not going to be charging $1,500 worth of premium.
Right.
And your average retiree could go through that in a hurry once they get into those bigger services. And then the second problem is they're not going to be a credible group in any way, shape, or form. And so to self-rate them by themselves could be, it would definitely be detrimental to your enrollment and to your selection risk. So it's going to be a little bit of a sticky wicket if it goes over great, and I mean, you get a lot of enrollment in it. You'll have to watch it pretty closely.
Mm-hmm. Mary?
Two things. What kind of, first off, like I always try to remember, dental and vision is totally on the employee.
Correct.
It has no Rutherford County money in it at all. We appreciate Rutherford County and Mercer negotiating and getting us great rates. We appreciate that. But what the commission needs to realize, and general public, it's our employee premium money only. No tax money, no county matching, so dental and vision. So the retiree that goes on, it's his or her money also. So just to remember that, it's I have both, so I can say it's my money and my money only. But I do appreciate the county making those negotiations for us. But what kind of, and on the other flip side for me, how about getting everybody signed up? What's that going to do, Melissa, to you and the ladies and gentlemen in the office on the distinction? I realize we're going to a different format on the whole computer system thing, but how is this going to be able to, when you had your retirees, you had medical only that you had to worry about them. So I know with everything it adds to y'all, but I mean personally, with you and Corinne and all of them, what is this going to do for y'all trying to manage us 63 or plus 6,300 plus lives that work, and then this almost 650 pre and post on the retirees? What are we looking at on y'all's part?
Well, we don't set the dates for annual enrollment to mingle the retiree group with the active group because that group is very large. So the active date for the annual enrollment for active employees is October 1st, noon October 1st through noon October 29th. So that gives us a little bit of time in between the time, 8 days basically, not really 5 working days, to get prepared for the retirees. They don't use the computer. We don't have it set up on the computer for retirees to choose benefits because of the setup, the eligibility, the structure. What we would do is add the dental and vision option to the form that we mail out to them, to give them the option to make a change to their medical plan. So we would add that, we would communicate it. Mercer works with us on our communications. We would educate the retirees, on what's coming up and what they're eligible for, and we would have them choose the option. Then it would be up to our office to actually put that benefit in the system and record it and get all the financial parts set up for them. So we have Jennifer Bennett in our office that actually handles retirees, so she would be working on getting this all coordinated together. So.
All right. Other questions? Well, I guess I was a little short-sighted, no pun intended, talking about vision. When I thought this would be a shorter discussion before we got to property casualty, so evidently it wasn't. It's like, Jeff, when we have a short agenda at night and on some of our committees, I tell Teresa that there's got a real short agenda and we end up talking 3 hours and don't get home and food's cold. And when we have a long agenda, nobody wants to talk about it, so they get out fast, right? So it's just the opposite. I should have known better. Is there a motion?
Motion to approve.
Motion to approve. And a second. Other discussion? I think we'll probably need to call roll on this one. Lois?
I'd like to request that maybe we add a definitive statement into the motion stating that it would be revisited at least on a semi-annual basis in order to determine if there needs to be a risk load added to the retirees so that no cost is relegated back to the active population.
Is that an amendment to the motion? Or, Mary, would you accept that into your motion? Okay. Okay, everybody heard the motion which Lois put into Mary's motion. Is that okay? Who was the second? You're on the second. You're okay with that? Any further discussion on the motion? Let's call the roll.
Preble Acton, Rhonda Allen, Dr. Andrea Anthony, Doug Bodery, Shay Crowell, oh, she's not here. Amber Brown, Holly Deering, Alan Farley, Mary Hickerson, Lois Miller, Jeff Phillips, Shantae Sherrill, Eric Tutobeni.
Motion passes. All right, thank you. All right, next members, we'll go back to Mr. Patterson. David, if you'd like to come on up. David is our broker with Assured Partners, and we're going to talk about the property renewal and cyber liability. I thought it might take a little bit longer, and I'm going to help David through this process. Having 45 years in the business, it's sometimes we have to tag team to have explanations when you see such increases. Strictly from my knowledge, not that no relationship between you and I. All right.
Appreciate all the help I can get. Thank you,
Yes,
Mayor.
sir. All right, you're recognized.
Thank you. So at the last meeting, we kind of reviewed everything, and the way we left it, I'm actually going to make this really simple for you guys, I think.
Pull the mic over a little bit, David.
Pardon?
Pull the mic over a little bit.
Oh, I'm sorry.
Closer.
I was off to the side. I apologize. So at the last meeting, we reviewed everything, and the only outstanding items for the property and casualty insurance for the next fiscal year was the property and the cyber liability. Is it okay if we just review those two, or do we need to cover everything? I mean, I'll do whatever you guys want.
All right, just serve it up that, APIB.
Okay. So on the property, which is the first two pages of their exhibit, for the last 3 years we've been with the APIP property program, which running away is the best form in the industry. It is no longer available in Tennessee, so we had to find another carrier. Travelers, I was able to negotiate with Travelers to get a pretty attractive quote. Underwriting, actually, you can see the premiums. The first column is where we are now. The second column, Travelers Hanover option 1. And then, of course, Travelers Hanover option 2. She was able to match the premium. The coverage isn't quite as good, but it's frankly good enough. So the biggest difference between Travelers option 1 and 2, actually the only difference between options 1 and 2, is the per occurrence limit, meaning any one occurrence, any one storm, any one, fire, that kind of thing, the limit under option 1 is $250 million. So tornado comes to mind, lands on a school campus. There's typically 2-3 schools in one place. That could be a significant claim. I don't know that it would be more than $250 million. I'm pretty sure it wouldn't be more than $250 million. I wanted to show you both options because we're currently with a $500 million option. So I wanted to show you what a $500 million option would cost. But the probable maximum loss, the PML, is probably about $150 million in that neighborhood. So $250 is going to cover 99% of the stuff that's ever going to go wrong in the county. Could you have a claim bigger than $250 million? Absolutely, you could. I mean, we can't foresee everything, but the difference between the two is $250,000 a premium. I don't know what y'all's call whether it's worth that or not. So that's the significant difference, actually the only difference between those two options. From a coverage standpoint, I highlighted a few things on the second page that I wanted to point out. I was able to negotiate with Travelers to get adequate limits on all of these sub-coverages that are within our program. The Travelers form does not have what we call a course of construction coverage form. The APIP form did. Now, how big of a deal is that? As long as we're negotiating with our GCs when they're building schools or doing renovations or whatever, and the GC is required to provide a builder's risk, which I'm certain that they are, this was just a backup coverage. If something went wrong with the GC's coverage, we had this as a backup plan. So I don't know that we want to pay money for that, but I can certainly get, some kind of blanket builder's risk coverage if you guys want me to. Not sure it's worth it. The other thing is the auto physical damage. Auto physical damage was covered under the APIP form on replacement cost. Okay, so if we lost, highway department, a bunch of trucks and stuff are parked in a building burns to the ground, we lose 10 trucks in one fire. That was covered at replacement cost. On the Travelers policy, it is going to be excess of the $1 million that we have under the casualty, the BRIT casualty policy that we approved last meeting. There's $1 million of auto physical damage at replacement cost on that policy, but it's going to be actual cash value excess of that $1 million. So that's a significant difference. Okay. The other significant difference is under the deductibles. Because of convective storms and how, blame global warming, blame whatever you want, there's definitely a significant increase in convective storms, big storm cells moving through, spawning tornadoes. Travelers needs a 2% or $250,000 deductible for wind and hail. So that tornado example lands on Blackman, wipes out 3 schools, that's going to be a $250,000 deductible. As opposed to normally it'd be $100,000 for a fire or whatever, it'd be a $100,000 deductible. And those other two I noted that they're ACV instead of replacement costs. Those are really the significant differences between what we have with APIP and what we will have with Travelers. Yeah.
On that first schedule, I'm not an insurance expert, but where we have coverage for fine arts, jewelry, furs, precious metals, monies and securities that we have now, newly constructed, acquired buildings, $250 million, those things.
Yeah, so fine arts is covered under just like regular BPP under the Travelers form, so it just be rolled up in the BPP form, in the contents coverage.
Yeah, business, personal property.
Yeah, it's personal property.
What about the...
So money and securities was a throw-in. So a lot of these coverages that are on the APIP form, we didn't ask for them. They're just there.
Okay, I just didn't know. Museum. With the museum, it's like, okay, all that's covered.
Oh,
yeah, we talked about that a little bit earlier, and we've talked about it in a previous meeting with the museum and the artifacts that are going to be donated or on loan. Being on the State Museum Board, I know that we're covered for those items as long as they're there. I need to get a clarification what happens when the State Museum is planning on bringing artifacts here to our museum that will be on loan. I'm not sure if we're going to be required to carry them or whether their coverage will extend over to that. It's hard putting a value on some artifacts, so you just insure them for what you paid for them. The example I used with David earlier this morning was a few years ago when I was on the State Museum Board, they came to us and said that they had the uniform of the Union General who was the commander of the Battle of Nashville. But they had been in search for his battle sword, not a ceremonial sword. They found it, and the family who owned it said, we'll take $75,000 for it. So they had to come and the money wasn't budgeted, but it had to come somewhere. So what it was insured for was $75,000. So it's kind of tough. We'll have to reevaluate that, you know, and we're planning on opening it sometime within the next 30 days. I would say we don't really have an idea. I know Dr. Talbert has told Dr. West that he's going to donate all of his stuff, all of his 18th or 19th century medical saws and bone saws and pictures and etc. because his kids don't want it. So he's going to donate it to the museum. We've got Jean Faircloth's wedding dress that was married to Douglas MacArthur. That's coming. Those type of things will be coming into the museum. I don't know how. We'll just have to establish it, but to put a price tag premium-wise, it's going to be negligible, wouldn't you say, David? Mm-hmm. Sonia.
So, yeah, unscheduled animals for you guys would be the canines. So under the APIP form, there was actually coverage for animals. That's an unusual coverage. It's not in a typical property form, and it's not in the traveler's form. So, you know, when I'm negotiating with Susan, the underwriter, to get what I want, the big stuff is what I'm going for. You know, we have a $100,000 deductible, and a canine unit is expensive. I mean, we spend a lot of money training these dogs and stuff, so it's a $40,000, $50,000 investment. But if we lost a dog, it's still going to be less than deductible. So when I'm pushing on underwriting to give me what I want, yeah.
So I sit down and talked with David, and I'm very familiar with the Travelers Form. Travelers is good. APIB was remarkable. We were lucky to have had that coverage when we had it. But over my 45 years in that business, you see companies that come and go, David, who will come out and they're all gun-ho. President says we're going to write everything that we possibly can, so they throw it up against the wall and say, let somebody try to beat us. They throw everything to the kitchen sink into their policy forms. It lasts about three to 5 years. Usually I've seen several cycles of companies like this, and they think that they can go in and write all the business because they are so competitive and nobody can touch the coverages. Well, they get burnt, and they really don't have the money to back it up. Unlike a Traveler's been in business since the 1800s, they're well heeled compared to APIB. To look at the difference, that's a huge difference going from $500 million to the $250 million on the occurrence limit. The premium is, in my opinion, is we can't see the exposure over that 150, right? What you anticipate at 150 million, you know, we won't suffer a fire that would eclipse that value. We're not in an earthquake zone. Flood is covered under the policy for a certain limit. Tornado is about the only real exposure from a centralized location if it hit one of our campuses where we have 3 schools. But I still don't think it would eclipse 150 million. So for $250,000 more in premium, I'm saying option 1, from my opinion, if that's worth anything. Eric.
Let's say the rates were locked in for 20 years. $250,000 over 20 years is $5 million. What's the likelihood over 20 years of exceeding the $250 million covered by $5 million even once? You understand the math on that one? I don't know what the likelihood of that is happening. So I just want to throw that out so that that's
Well,
So there's, I mean, insurance companies run what we call probable maximum losses, and that's kind of how they figure out.
Somebody that's going to be 20-year lock-in anyway.
Right, well, right, we're not
That's
going to have, yeah, I mean, the rates, yeah, the rate will change next year. I mean, we're going to, it always, yeah.
Weighing that against what the mayor was just saying, I still side with what
Yeah.
Mayor Petsch was saying. I just want to throw that out there in case that was a factor.
Yeah, I agree with the mayor as well. I think a $250 million, I mean, I can't promise, obviously, that, you know, we're not going to have a $300 million loss, but
You're looking backwards in the last 20 years, does it ever happen?
no.
Yeah,
And the probability, that the probable maximum loss, the probability of having more than a $250 million claim or occurrence is very low, like, very low.
As Murfreesboro grows in the future, and there's more buildings, more schools,
Right.
more high-rise, you know, in the next 20 years, perhaps there will be something. Probably it's better using that 250,000 in the short run.
Yeah. Yeah, and we review this every year. I mean, so, you know, next year we could raise that to 350 or 500 or whatever, so. Yeah.
Lois?
Last meeting, you mentioned that we had, as the property values increased, the coverage would increase. Is that true at no additional cost? Is that still true?
No, that is not. So that was on, I'm sorry, I left that off at the bottom of the page. I probably should have highlighted that as well. At the very bottom of the second page, no adjustments for endorsements over 25 million. That's not the case anymore. So anytime we add a new building, and I was going to bring that up in a moment, we're getting ready to add the Plainview Elementary School. That'll come online in August. So, Lisa, these numbers don't reflect that. That $30 million roughly is going to be about $15,000 a premium. But when I send you the spreadsheet, it'll have that. I'll have that in there. So Shoup is looking at that building today and is going to give me the replacement cost, because I don't need the infrastructure. I don't need the ground and all that stuff. I just need the, so I'll have that number. But it's going to be roughly $15,000. So it'll be in the budget. Tuesday? Yeah, Tuesday.
Harry?
I'm looking on the first page, the newly constructed acquired buildings. It went from 25 million to 2.5 million? So that's really not a typo?
No, it's not a typo. Right, so.
I'm missing a zero. It's
not, I didn't miss a zero, no ma'am. So newly constructed acquired, if the county buys a building, then Ed needs to tell me. So one of the things Ed and I talked about this yesterday, the day before, that we just have to make sure that we've got good communication between all the departments. Because $25 million, you know, you're not going to buy a building or build a building in $25 million that everybody doesn't know about. But you could sure buy a $3 million building somewhere that just slips through the cracks. So we have to have those lines of communication.
No, it doesn't slip through the cracks, because I got to sign it.
Yeah.
You don't let anything slip through the
So we
cracks.
just need to, yes, sir. We need to just make sure. I mean, there's some automatic coverage, just in case, something little. But if it's big, we just need to talk about it.
And also, you are awaiting a quote.
I got the quote.
Oh, you did?
It's not good. No, so this rate.
So there's no sense talking about it?
No, we don't have to talk about it.
Okay. Liberty Mutual's
Yeah, so
coming in with
Liberty,
a quote?
what we're talking about, we were talking about this earlier today. Liberty Mutual is going to give me a quote, gave me a quote. But the rate with Travelers is, this is going to sound weird, but let's just call it 5.2 cents per $100 of value. Liberty Mutual is 8.4 cents, so.
Okay. No. No discussion.
So that's the property. The other.
Now we'll get into the tough part.
Yeah, the next couple of sections is the casualty, which we discussed last go around, and that's exactly the same as it was at the last meeting. Nothing's changed. So are there any questions about that?
That is with Brit.
That is with the Brit, correct.
Who we currently are insured with. No problem. Everything remains the same, which is unusual.
Yeah. So the other unknown last time was the cyber liability, and wow, did I guess wrong on that. cyber liability has really gone off the rails. It's getting worse, not by the week, but by the day. So last year, the APIP program had a cyber liability add-on that was very, very competitive, $2 million limit, and we paid $7,800 for it. The only quote, not the best quote, the only quote I could get for cyber liability for the next fiscal year was with Cowbell, which is a Lloyd's syndicate, and you can see the premium's $48,000, and it's only $1 million limit.
So we lost $1 million in coverage,
and
the premium
went up 7 times.
7 times what we paid last year. And I'm sure with the recent claim with Colonial Pipeline, where they just paid out $5 million in Bitcoin, and as Cody, our IT director, says, that is not only $5 million, because I'm sure Colonial had to go in and clean every device that they had up and down the line, even down to printers. If they couldn't clean them, they probably had to buy new, because all it took was one little bug to get in a printer somewhere and reinfect the whole thing again, and they've got you again. So, but I'm sure that has affected the market globally, and it's tough, but we can't go without it. We can't take a chance. That's why Cody is continuing at the last, Sonia, at your last meeting we had with the department heads the week before last, or last week, whenever that was. We keep urging and asking department heads, please talk to your employees, please let them know that this is a possibility. IT goes in and does phishing. They'll send out emails hoping that you'll click on it as a trial, and sure enough, you know, it looks like it was sent to me, and I clicked on it, and it was really, you know, it was a test. So we had, what, 40 some odd people who clicked on that last phishing trial. Just thank goodness that it wasn't for real, because all it takes is somebody to get in and hold us hostage. And being the fourth, say, when we get our census numbers, we're the 4th largest county in the state, we're vulnerable to these type of cyber attacks. And they want the money in Bitcoin to be sent to wherever in the Ukraine or whoever's, Russia, or whoever's attacking us. We just can't afford to take that chance without this.
And the Colonial Pipeline is a perfect example, and that's a very high-profile claim. Most claims are in the average claims are in the $200,000 range. Not saying that your guys would be $200,000, who knows what it would be, but the bad guys are figured out that they don't have to be hackers. They just send, you know, emails, here, click this link and tell me what you think, and somebody does it. And then they own your data, and you have to pay them to get back. And that's what happened to Colonial. It's just that simple. They don't have, they're sneaky, the thieves are. So, and it's not just, you know, public entities, but public entities are really worse than everybody else in terms of premium and coverage and stuff like that, because you got 7,000 employees and you got all these different departments, and to your point with Cody, you know, he's trying to like get the training going, and I can't tell you how important it is, because if you have a claim, probably not going to be able to buy insurance. I've got, you know, clients all across the country that are getting non-renewed because they had a claim, and we can't get them more insurance because they had a claim. So cyber liability is going off the rails. The claims are going through the roof, and it's all ransomware. Somebody clicks on a link. So,
Mary?
Based on this cyber liability and the other changes we're making, and we're the 4th largest, out of all the counties or governments in other states, are these the numbers of premiums going up for everybody? Or have we been, as Rutherford County, lucky and been getting good deals, and now it's hitting everybody, even larger and smaller than us, to this degree?
Everybody's getting increases, significant increases. So I didn't even get, so the current cyber liability is with a company called Beasley through the APIP program. And I haven't even gotten a renewal from those guys because we're not part of the APIP program anymore. But it was going to go way up anyway. way up. So no, definitely not Rutherford County's getting singled out, and I don't know that you're taking it any harder or better than anybody else, but it's bad throughout the industry.
Okay, looking in the business where we're getting interrupted, I do see that those numbers have kind of gone up. For system failure, they had it at 250,000, now we're at $1 million.
Yeah, there's some things,
are those three items, tech savvy I'm not, so are those three items another way to say, okay, we did get an increase on that is something that could potentially hit us maybe even quicker than some of these other numbers that went down?
No, not necessarily. So what you're seeing with the cowbell quote is more typical of what you see in a cyber liability form. It's like, they're kind of their off-the-shelf policy, if you will, where they say, okay, here's $1 million, and you have $1 million of like everything. Where the Beasley was a little more tailored, like you can see system failure, $250,000, where now it's $1 million. That's actually better, so.
Other questions on cyber? Bless you.
So the other, and I don't know, did we decide on a dentist yet? Have we decided?
We haven't filled a dentist yet, have we, Sonia?
So the next one is the dental professional.
Hi, Amber. I'm sorry.
We don't have a dentist.
We have not filled the vacancy for the dentist. Okay.
So on 7-1, if we don't have a dentist, we won't do this dental professional policy, that $4,000 a premium.
We're looking for a dentist.
Well, we can leave it in the budget, and if we do it like on August 1st, then we'll write an 11-month policy that expires 7-1, and it'll be a little less premium than that. So we'll just leave it in the budget?
Okay. Yeah, we need to leave it in because we are actively looking for one.
Okay.
We have a new director, and she says she wants to try to fill that position, get a doc in there in the chair.
It is position, or it's person-specific, so we can't write the policy until we actually have an individual.
Yeah,
it's in the budget, we're ready to go, yeah.
On professional liability like that, they need to know whether they graduated from college, what their claims experience was, how old they are, what school they attended. It's a.
Are they a real dentist?
Yeah, are they a real dentist?
Pardon?
No. Yeah, liability's liability. You can put a string on it and pull a tooth and get an infection just like you can with a regular dentist, right? Okay.
Next page is the occupational accident for the firefighters, both employed and volunteer. Just the Rutherford, we talked about this last time, it's just the Rutherford County firefighters, not
the
volunteer fire departments. And then we have a self-insured bond the state requires us to maintain as long as we have open work comp claims from back in the day when we were self-insured. And then the last page is just the brokerage fee. That's it. That's all of it.
Okay. What, Doug?
Is that a requirement of state law?
Yes, sir.
I tried hard. 2 years ago, I tried hard to get it changed, and they wouldn't release it until all those work comp claims. I think are there still 10 open? There's still 10 open work comp claims from 10 years ago, and until they're all closed. If we don't pay for those claims, then this bond pays those claims. Yeah, no, we don't want to do that. It's a financial guarantee that because we were self-insured 10 years ago, and there's still these open claims that we're still paying these individuals, either indemnity or ongoing medical or whatever it might be, we have to have a financial guarantee bond in place so that if the county doesn't pay somebody's doctor bill, they go after the bond, and then of course the bond carrier comes after us. So, correct. But this was from 10 years ago, yeah. But now we're self-insured OJI, which is a completely different set of rules. Way better than workers' comp.
Is there a motion?
Move to accept the recommendation.
Have a motion to accept the, I'm sorry?
Option 1, yeah, option 1.
Option one.
Option 1.
With Travelers? Does everybody understand the motion? Is there a second? Have a second. Any further discussion? Ms. Thompson, please call the roll.
Dr. Andrea Anthony. Doug Bodery. Holly Deering. Alan Farley. Mary Hickerson. Lois Miller. Jeff Phillips. Shantae Sherrill. Eric Tutobeni.
Okay, I think that concludes our agenda today. See, it does save a little bit of time not calling roll, Ms. Thompson. Only did it twice today. Anything else to come before the committee? Well, this will be our last meeting, I guess, before we set the budget. Yes. We meet next month? June?
It's on the calendar.
Okay, we haven't decided yet. That's good. Okay. Nothing else to come before us? Joe? Okay. Well, I hadn't decided yet, and we'll see. I think this should conclude our business, and we'll probably meet back in the end of July, maybe August. But, of course, the commission does not meet in July. Only break we get. Okay. Hope everybody has a safe and Memorial Day coming up. Be safe and eat lots of hot dogs and hamburgers, and be careful. And thank a veteran, and thank God we live in a free country, right? Thank all those who sacrificed for us. We stand adjourned.